done a little custom presentation with some of the Bronwyn specific data, including the latest IVS and NVS which came out. So it's kind of a smorgasbord, some of the Deloitte forecasts and some other things that I think you might find relevant. It's very much a short and sweet presentation, kind of covering all sorts of things. A lot of my favorite tourism statistics, if you will. It's always more fun when you like the stats on screen. So without further ado, we'll get started, and I will figure out how to advance the slide. Oh, it shouldn't be so difficult, but it is all of a sudden. There we go. So we see the first of many chapters today. So we're going to kick off with the global state, the big whole wide world picture, and then from there we'll move into, of course, Australia tourism, and then right down into accommodation, a little bit about Airbnb by special request, and into our forecasts. Following that, we'll get into some questions. There, I found the forward button now. So quick big picture. International tourist arrivals 2016 versus 2015. World Tourism Organization gave us this at the bottom there, 1,235 million, or B for billion, that's 1.2 billion global tourism arrivals. Fantastic results, and we'll take a look at this a little bit closer. Here in 2017, this is the growth rate. So America saw 3% growth, South America 7%, across Europe, and coming in there you have North Asia and South Asia at 14%, and Oceania 7% growth. Already in the first 3 months of this year, it's 7% growth versus last year at this time. So fantastic, very positive picture for not only the world's tourism sector, but also here in Australia. And this theme of big green positive numbers will flow through the presentation today. When we look at this on a trend line from the World Tourism Organization, we surpassed 1 billion tourism arrivals in 2012. And this green arrow here just paints the picture. If you haven't gotten that graph already, things are going upwards. By 2030, we expect to have nearly 2 billion international tourism arrivals. So tourism is definitely a sector that you want to be in. It's no negative doom and gloom here. Everything's going forward. Now, quickly zooming down to here at home within Australia, got some nice kangaroos there, courtesy of Tourism Australia. We did a little breakdown here at Deloitte, looking at global industries here, and what we did is we put that line across there showing GDP at 0% and then plus 10% and minus 10% of global GDP growth. So of course we want to be playing in those sectors that are growing more than 10% of global GDP growth, and we highlighted those 6 on a global basis, and of course tourism there is number 2, growing at just over 4% above, so 14% faster than global GDP growth overall. On a worldwide level, these are the 6 industries that you want to be in. And then when we compare this within Australia's benefits and competitive advantages, which is the vertical line there. So if we're on the right of that axis, Australia has a competitive advantage. We have those facilities, we have those skill sets. We can see once again the upper right corner, more than 10% growth, and those are those 5 sectors that we want to really focus on. Mining is the other sector that's growing fast in Australia. We have a competitive advantage in that, but tourism there is really where we want to be. So this comes out of our Building the Lucky Country report, and Australia really is the lucky country when it comes to tourism. And we should see this follow through until 2033 at least. Tourism Australia recently put out a new survey, and we rank number 1 according to our international colleagues in scenery, sightseeing, destination worth traveling to, and a great destination for business and conference events. So we already know that we have this great country, and we just need to work together. And based on that, Tourism 2020 came about. It's an all-of-government initiative where all of governments working together to realize our tourism potential. So of course, you have the states, and you have the Commonwealth, and then you even have down to local municipalities. The objective here, most of you probably all know this, but it's 115 to 140 billion annual spend. That's what we want to get to by 2020, and we're getting there. We're making good progress. So here's a top 3 takeaway figures. That 88% there, we're 88% of our way in the accommodation room supply towards the upper target of the 2020 progress. That's 140 billion per year. Also aviation capacity, the second one there, and then aviation capacity domestic. So we're tracking very well in these 3 categories alone. The green is the achieved percent. When you look at potential overall, well, we do have some more opportunity there. It's 38% along our way to the upper end of the target. It looks like we're already going to meet that 115 billion lower end of the range, but we're really striving for a little bit better than that. Overall, high fives all around. I think we're doing a great job here in Australia. And looking forward, we've done some GDP per capita growth and correlating that to tourism travel. So down on the left there, you'll see I've highlighted just 2 of those diamonds. So each of those diamonds is a country, but I just wanted to highlight 2 of them, each with 1 billion people in their population, China and India. And look where they are on that curve. So this shows along the axis on the bottom, as the GDP per capita increases, the departures per capita increases as well. So China and India, that's 2 billion people plus. Where is that going to go over the years to come? Of course, it's going to increase. And we are well positioned to take these inbound tourists. So moving along, second chapter, we'll get into the Australian-specific tourism statistics. This is the latest, greatest from Tourism Research Australia. We have international visitor surveys. We have 3 positive growth figures there. Visitors up 9%, nights up 5%, and expenditure up 5%. Coupling that with the domestic travel, we show, once again, 3 more positive growth figures. 6% overnight spend, overnight trips up 3%, and nights up 4%. So I'll break these 2 down a little bit further, but these are the 2 major areas where we measure tourism. So of course it's inbound coming into Australia, and then it's domestic travel by Australians within Australia. But when you have 6 positive arrows, it makes a fairly compelling story for the growth of our tourism sector. Top 5 source markets, these account for about 45% of all international arrivals to Australia. Once again, all 5 showing growth, leading the way with China, 1.1 million guests, nearly overtaking New Zealand there, 1.2 million guests per year. And overall, this counts for 9% overall growth in international inbound visitation to Australia. So 9% more people are coming to Australia year on year. And when we break this down into which sectors, holiday. So we are the land of kangaroos that everybody likes to come here for. 14% growth coming into the holiday destination. Education, very strong, 12% growth, and business travel, 5%. Now, moving into the Australian travel sector, so how are Australians traveling? Well, 6% growth in overnight spend. Overnight trips increased 3% year on year, and holidaymaker trips, 31% increase, which is a fantastic figure to see more people holidaying in Australia, despite what you may feel within some of your own businesses. We can get to that in questions, but the TRA data shows a 31% increase this year over last year in holidaymaker trips.
So
in that yellow box
sorry,
there, I wanted to raise a flag.
Actually, no.
Oh, yeah.
I'll take that at the end because that's a biggie.
Okay. Okay.
Going, whoa,
the yellow box there is quite interesting as well, and that might raise some questions. So according to the latest stats, the growth of nights in hotels grew 1.2%, whereas rental accommodation, which includes some of the homestay options, grew at 9% rate. So I put that in yellow. That'll flow through to our Airbnb section coming shortly. Now, this one's quite interesting as well. So this is intrastate travel alone, not interstate, but within the own state. So largely the drive market, some flights within the state, but the drive market. The gray circle shows a 4-year period ending in 2012, but focus on those 2 green circles there. So in WA, for example, we have trips growing 17% in that 3-year period within the state. In Queensland, it grew 13% within that 3-year period. So this does show that Australians are choosing to travel domestically more than they have been in the past. Of course, the Australian dollar plays a large part in that, but there's a few other factors too, as we'll see coming ahead. One thing that we must mention is Australian outbound, because this was a very large component when the Australian dollar was much stronger and we were taking our money to Bali, to Fiji, where it might be. But this has dropped by more than half of what it was just 5 years ago. So on the right, you see that bar chart. This is the latest March 2017 data from International Visitor Survey. Holiday and leisure still increased slightly, yet the nights spent abroad, so the trips increased, but the nights spent abroad decreased by 283,000. And this is about the same for business. The number of trips increased slightly, yet the overall nights spent abroad did show a slight decrease. So this is the only slide we'll see that it's good to have a negative figure. We want more people staying here within Australia, supporting our industry, as opposed to taking the money overseas. Now, moving into the accommodation sector specifically, a lot of the work that I do here focuses on hotels and service departments. Real quick takeaway just to understand how high the occupancy levels are across some of our capital cities. We see 88% year-end occupancy for Melbourne, 89% in Sydney. So that's 365 days of the year, including Sundays, including the winter months, 89% overall occupancy rate at the hotels. A little bit less than that in some of the other capital cities, but this just goes to show how strong and how full our hotels are in these capital cities. Most of you have a much more localized figure with your STR statistics if you participate or operate a accommodation property. Because of these high-level occupancies, we've needed a lot more rooms. So we are in the midst of what I call a hotel building boom. 152 new properties are being built at the moment, excuse me, or in the next 3 to 4 years they'll be open. So this is only really a 4-year time frame. So some are opening yet 2017, but for the next 4 years, all these statistics pertain to that. So while that tracks at about 31,000 new rooms, we apply a likelihood rating to that, and that's where you get that 24,600 rooms. So only about 24,600 rooms are likely to go ahead. Some of the projects won't go. They're still in planning phase, or they might need government planning approval or what it might be. So likelihood, we say 24,000 new rooms, and that's about 2% new supply. So think about that 2%. We just saw international growth at 9% levels. We saw domestic travel at 3%. Yet we're only building new rooms at a 2% growth rate per annum. So you can just start to see that we don't have enough rooms at the end to handle all these new tourists coming in, which is good and bad. It depends on where you are in the picture, but it just shows that the tourism is growing faster than we can build these properties. I want to mention this Airbnb for a few seconds here, and we've done quite a bit of work on this, so I'm not just speaking from my own experience with them. We've been working with them quite closely in the whole sharing economy sector. So this is a quick snapshot just to paint a picture of where the Airbnb properties are in Sydney. You can see the congregations there in Bondi, Manly, and the King's Cross district. So not necessarily in the CBD. There's very few properties there for rent. And this is a fairly representative of what you'll find across other cities across the country. So they're primarily outside of the CBD regions, and that's kind of their market focus, if you will. Some work that we recently did using direct data from Airbnb showed how hotels versus Airbnb compare. So that's Sydney Central. Sorry if you're in the rest of the country. This is just for illustrative. We did actually run this report across each state and territory. But you can see the difference there in price. So that's a hotel's price per month, and then it's the Airbnb price per month across central Sydney. And then on the right side of the screen, you see rest. So that's the rest of Sydney, hotels and Airbnb. The takeaways coming in there at the bottom of the screen, you'll see an $88 price difference in the CBD of Sydney from a hotel property versus a Airbnb type rental property. In the rest of Sydney, there's a $50 difference in savings. Now, as of late, Airbnb is focusing on the business travel segment, which could definitely have some further impact on that hotel sector, but also provide benefits for the business traveler. They've launched this product called the Business Travel Certified. So it's a completely different kind of, it's no longer home sharing. It's actually almost like a hotel room in the sense that you have all these different services, 24-hour check-in. You don't have to try to meet somebody for a key. Wi-Fi is included, toiletries are included, and no sharing whatsoever. It's always a private rental. So this has taken off quite well within Australia, and we expect this to kind of gain them a little bit more market share. But once again, we don't see them tapping into the hotels' stronghold just yet. Occupancies are still very high. So this is the part of the presentation we're going to start to look forward and get into some of the Deloitte forecasts. Hope everybody's excited for these. Some of the big macroeconomic implications that we're looking at. So GDP growth, of course, we need our international market to be experiencing GDP growth so they can afford to travel to Australia. We are a long-haul destination for most markets. And despite the recent turmoil in the global scene, we do see GDP growth across most of our source markets, USA included. Clear skies for Chinese arrivals. So the Year of Travel program, which Tourism Australia signed with China, has enabled a raft of different programs to enable Chinese visitors to come to Australia. Easier visa processing, more flights, open skies arrangements and such. So this will just pave the way for more Chinese visitors to come to Australia. Oil prices on the rise. It's a very uncertain sphere out there in the oil price world. So we do have some uncertainty. We don't know exactly which way they're going to go, yet the low-cost carriers continue to grow and provide lower-cost flight options. So despite oil prices going up, we have the increases of AirAsia X coming to Australia, Tigers growing, and other carriers. And the lowering Australia dollar. Well, if you've been looking at the papers the last 2 weeks, it's jumped 5% on its status. Wrote this presentation a few months ago, but I did have to change this just because of the last 2 weeks trend. So, of course, a low Australian dollar, 73, 74 cents, as it's been most of the past 2 years, is great for inbound and domestic travel. So the last 2 weeks, don't know quite what's going on. We'll wait to see how that plays out for our outbound travel. And the Australian economy slipped slightly to just 2% growth. So not a major growth, but just a very small slip down to 2%. So of course, that has directly correlated to a small slip in corporate travel, which do fill a lot of our hotels around the country as well. So these are the kind of factors that we took into account when we put together these forecasts. So Australian visitor nights, this is the 3-year forecast per annum. We're looking at international visitor nights growing 6.2%. So no longer that 9%. We don't see that as sustainable, but more around a 6.2% figure each year for the next 3 years is much more attainable. And domestic figures within Australia by Australians, 3.2% per annum for the next 3 years. Translate this international visitor arrivals, so people coming into Australia, 3-year forecast, 6% per annum arrivals. And we're going to see leading the way India. Once again, 1 billion population. We have direct flights, Air India, from Melbourne up to India now. And then China and Indonesia, second place there, both growing at 10% per annum for the next 3 years. And then recent growth of the USA market, 7% growth for the next 3 years. We foresee this continuing. Now, breaking down into the nuts and bolts of the hotel and accommodation sector. So this chart shows the historical average rate and occupancy and RevPAR, and then on the right of that line there you see the forecast. So I've kind of highlighted what we see here. Occupancy, we don't have many more rooms at the end, and as I said earlier, so only growing about 0.5% over each year for the next 3 years. That's on a national level, where some of the cities are going to grow a little bit further. Average rate only growing 2.5% per annum, so right around the level of inflation. So we don't have many more rooms for people to purchase, and that will mean supply and demand will work its way through, and we'll see average rates increasing. But it's not a substantial rate growth, 2.5%. We think the market will absorb that. I've zoomed into a couple capital cities here, so apologies if you're not in one of these capital cities, yet I think these are kind of the demand drivers and the international gateways as I have listed here, so they will have some sort of effect on your international and domestic visitors. So Sydney, we saw a 9% arrivals growth to date, 6 Chinese carriers coming into Australia. We have the ICC effect as one of the major demand drivers, already over 380 events booked there in the next 2 years. Corporate-based business. So this has always been a major piece of Sydney. If you want to do business, you need to come to Sydney at some point for business meetings. Cruising capital, that's Ovation of the Seas there, one of the top largest cruise lines, and their bumper cars that they actually have on board, which I found amazing. 336 ships in 1 year period docked in Sydney Harbour. It's a fantastic base business for Sydney. And of course, special events, Vivid, Mardi Gras, Chinese New Year, all contribute to the booming Sydney sector. So new rooms by year, 2017, we expect to open 825 new rooms, and going on from there, you can see 2020 beyond, just over 1,200 new rooms. And this is the forecast. So there I have the per year for the next 3 years forecast. Occupancy, we don't have any more room to grow in occupancy. Room rates growing 5% per year in Sydney alone. That's because of the supply and demand and all of these demand drivers I've listed. This screen format will be the same for the next 2 Sydneys as well. So if you're interested in Melbourne, and then I think I have Brisbane next, so stay tuned for that. So Melbourne, number 1 benefit there, population growth. They're going to overtake Sydney as far as population. That means more people there doing business, more grandmas to visit, more kids coming home. You will have busier airports because of that. And of course leading on to just more activity, more visitor activity. The Jeff's Shed, nicknamed Convention Center, is now overtaking Sydney once again. Once ICC was built in Sydney, they weren't happy with theirs being second largest, so they undertook a major renovation, and they will be the largest convention center in Australia once again. And Melbourne's well known as a sporting capital, many special events which drive occupancy and demand, shows, exhibition events, concerts, you name it. A little bit lower in the occupancy category, but yet a very strong market going forward. This is a much more steady room count addition to the market, and the forecast occupancy coming off just a tick down to about 88% for the next 3 years, whereas rate growth, ADR, average daily rate, growing at 2% per year for the next 3 years. Big takeaway number, 30 new hotels coming up in Melbourne on our records. So fantastic. New properties, which we think will actually have two effects. So it's not going to be too much supply because there's all these demand drivers, but it's actually going to be newer, shiny, exciting, major brands such as Ritz-Carlton, W, and such, which will add to the high-end category and which will help rates go up in the Melbourne market. Brisbane, let's move to Queensland quickly. Resource demand, yes, we think it's stabilized. So it did come down quite a bit, but maybe it's bottomed out at the moment and possibly going to move forward. They've identified this in Tourism Queensland as well as the Brisbane marketing, I think it's Brisbane Marketing Department. They've undertaken the Queen's Wharf development there, as that center picture shows you, which will be a fantastic new development bringing in more visitor nights. 11 new hotels coming up there. Supply is growing twice the speed of demand at the moment, which will see occupancy come down a bit. International flights grew 4.3%, direct flights to UAE, and then China as well as Tiger Air increases their growth in the Brisbane airport. So they do have a little bit of ways to go to get back to where they were a few years ago during the mining boom, but we do see a positive story for Brisbane in the long term. This just shows the new rooms. So 2017, 1,247 new rooms expected to come online in that market. Huge number. And because of that, you're going to see occupancy tick down 1.6% for the next 3 years on average, and then average daily rate go down $1 per year for the next 3 years. I've summarized a few other cities here, just in case you are located outside of these three. Perth, building for the future, very much the case. They also had that slowdown because of the resource boom, expanding their airport, Elizabeth Quay to Perth Museum, and then, of course, London flights on the Qantas Dreamliner coming shortly, and that will be a fantastic thing for their tourism sector. Canberra, they're growing their casino. It took me a while to realize where the casino was in Canberra, but I'm sure it'll be a razzle-dazzle new building in the future. They also have the low-cost carrier flights for the first time in a while, Tiger Air flying to Melbourne and other cities. And Singapore Airlines recently started flying direct Singapore to Canberra, and in that month alone we saw a huge uptick in international visitors to Canberra. Adelaide, or Radelaide as those South Australians like to call it, they have their Mad March events when they have Adelaide Fringe Festival, they have the Clipsal 500, a couple horse races and other events that all stack up for those holidaymakers. As well, 15 cruise ships. I think that's an increase actually, sorry, 15 additional cruise ships docked in Adelaide last year than the year before, and just shows that Adelaide is putting itself on the calendar and on the radar of domestic visitors. Gold Coast Airport actually grew faster than the Brisbane Airport this past year, and we'll see a lot more coming out of Brisbane, out of Gold Coast, sorry, with the Commonwealth Games coming up and all of the Magic Millions special events. They have some very nice new hotels going up there, the Jewel, and a few others planned, which I think will increase not only the perception of Gold Coast, but also the room rate. So much of the new construction in these rooms we're seeing is on the high luxury end level, which will bring in a higher spending type of traveler as well. So in summary, we're in a fantastic place. There was very little red or negative pictures upon all of my slides today. Everything was green arrows going up and positive growth signs. We have our competitive advantages that we just need to take advantage of, I think, on the global scale. Economic factors so far well in our favor as a country. We have aviation growth coming from pretty much not just Asia, but even the rest of the world. Strong growth from the California, North American carriers. We have Delta, American Airlines, and United all flying to Australia now direct. Accommodation, extremely high occupancy, which is fantastic if you're a hotelier. Your bums and beds are full. yet we're building too few rooms, an analyst like me might say. They're good quality rooms, which means rates are rising, yet we do need more rooms to accommodate more tourists. And then I must mention the, the home rental market. So you could look at this a couple different ways. Me as an analyst, I like to say it's growing to meet the demand of tourists. So with all these tourists coming in, and so many nights that we have full occupancy in Brisbane, Sydney, and Melbourne, there needs to be another way or another place for people to sleep. So we could look at the Airbnb, the stays, the different house rental markets as alternative options, which are growing as well. So all in all, we're doing a fantastic job in Australia, and I've drawn this little chart here to show in a visual sense, in case you're more of a visual person like me. So the whole world wants to come to Australia. We have our domestic mom and pops doing more road trips within the country as well. That was growing at 3%, remember? The hotel building boom is on, 152 new properties around the country, yet we're not sure that's going to be enough. Then, on top of that, we have cruise ships coming into more ports more frequently. Once again, that's Ovation of the Seas, the second or third largest in the world, and they're building more of them coming into all of our ports. Add on top of that, more flights. One of those arrows goes straight to Canberra, and of course, those London to Perth direct flights on the Dreamliner coming in the future. Hope you like my visual presentation. And I've, thank you, Brian. And this, as I mentioned, a lot of the underlying stats comes from our National Tourism Analysis Report. The next one is actually due out in August, and we put this out twice a year, and we do a small snippet on each of 3 different cities. And I believe once my animation is done, that is the end of my presentation. So we're on to question time.
Wow, thank you. That was absolutely amazing, Brian. I don't know about everybody else, but there's some pretty awesome numbers in there. And yeah, look, it's been, I don't know, I just get the sense it's been doom and gloom in the industry for a long time, particularly sort of moving out regionally. But this is really, really exciting stuff. So yeah, so time for questions. Does anybody have any questions? What you can do, everybody's on mute. So what I would like you to do, if you do have any questions, please just type them into the questions box and I'll read them out and Brian can answer them. So I don't see any there. So please fire away if you have any questions. Hang on, here we go. I have one here from Julian. Oh, hang on, where are we? Yes. Oh, hang on, hand raised. Let me just go. Okay, do you want me to take you off? I might take you off mute, Julian, and then you can just answer. Okay, Julian, you have the microphone, so would you like
Thank
to
you.
answer us the question?
Yes, you touched on regional. I'm just wondering if Brian has got any sort of research, obviously on places like Dubbo and Toowoomba and places like that, seeing how that's doing. And also, just for your information, Brian, I think it's Etihad are starting to fly into Canberra towards the end of the year. So that's another international airline. It's the Sydney flight, but it will be going into Canberra.
All right, yes, very good for Canberra. So it is a hidden gem down there, I think. To answer your question about regional data, unfortunately, it's not just a Deloitte concern. I think it's, of course, as it sounds like you're educated on this. You know that there's just a national shortage of data in those regional areas. So our report kind of reflects what's available by Tourism Research Australia, and then also what the market largely would like to purchase, I guess. You know, we like to do so much as we can, but yet there's very limited people that would pay for, I guess, our deep dive into the double market. So unfortunately, no, most of our stats do focus around those 10 capital regions.
Yeah.
Okay, thank you.
Thanks, Julian. Yeah, I knew this would be the question on everybody's lips, and I did try and forewarn Brian we'd probably have a few regional people asking the same questions, because for me, automatically, I was thinking regional dispersal, that we've got all these increases in passenger numbers, international and travellers. domestically, how do we get them out in the region as well? So we've got a couple of questions here. I'll start with, Kevin. Hi, Kevin. Why so optimistic that only good things will come from 152 new hotels, especially Perth and Melbourne? Well, I wasn't just referring to the hotel sector. I think maybe you came in the middle of the presentation. I'll send you the start. What Brian did is he went through some of the overall, I guess, tourism inbound and domestic figures, and we're seeing a huge growth. Well, a big growth, bigger than we've seen for a really long time, on just people traveling in general, people coming inbound. Did you say, Brian, less people going outbound, more travel, more people traveling domestically? And I think that's really good for all of the visitor economies, both in the cities and regionally. Broadly speaking, people are spending more, and that's I guess from our perspective. So yeah, so I might take you off. Do you want to expand on that, Kevin, or are you okay? I'll just might take you off here and open the mic to you. No, he's self-muted. No, take that as a no.
Oh, okay.
Oh, here you go. You're on.
Just a question. Quite a bit of the new hotels are yet to be financed in some cases, particularly here in Queensland. How deep has been the research into the actual likelihood of whether those 152 hotels will materialize?
One word: extensive research, Kevin. So this is primarily what I focus a lot of my time on, is tracking the national hotel pipeline. Where we're preparing now for the report and forecast to come out in about 6 weeks' time. So I know each of those 152 projects very intimately, I must say. And there's actually a few of those there's even another about 30 properties that are left out of that. So 152 comes from a 30% or greater likelihood to go forward. And we at Deloitte kind of assign each project a certain likelihood to proceed. You know, if it has the approval already, if there's an operator named, has funding been secured, you know, those kind of things that all work together. And that's all openly available in our report. So I completely agree with you, you know, and that's why I kind of clarify that, is we don't think all of these will go ahead, and each project actually has its own, you know, kind of quantity of if it will proceed or not.
So of the 152 that you're projecting that have different levels of assurance for you, do you still think that, is it 70% of those, or is it 30% of those, or is it 100% of those that are going to happen, and the other ones you've left out maybes?
So yeah, in that 152, that's 30% or more likelihood to proceed, if that makes sense. So I think there are overall, you know, around 180, 190. But then it's hard to say it's because it is project by project, and I'd have to look at the Queensland might have a different likelihood than each of the capital markets. But in those charts, like when I showed the Brisbane forecast, those actual room counts were based on each project's forecasted room count. You know, just for example, up in Queensland, I don't know where you are in the state. You know, we've got the Aquis project, 10,000 rooms up in Cairns. Of course, depending upon how you put that likelihood of that 7 hotel project together, it's 10,000 rooms in itself. So that would greatly affect everything.
Yeah, some of us are a little skeptical of the size of that projection.
Of course, yeah. So I think we have that one of the very low level of likelihood to proceed until there's new news or new agreements that come out from the state government.
Just so I did come in a little late, I had trouble accessing, but just in that the numbers that you gave on new rooms in those key capitals, are they drawn from the total inventory of those 150 hotels, or from 30% that you think are likely? In other words, the inventory increases you were showing, do they reflect all of those new hotels or not?
No. Those are, of course, specific to those postcodes. We go down into great detail.
Okay.
And even when I say, Brisbane and Sydney, I must clarify, those are primarily the CBD or the city districts. So we don't, we're not measuring even the wider greater Sydney region. And this is because most of the investors that we work with as well only want the city region. Not to say, we have people building hotels out in Parramatta and, the airports and such, to use Sydney as an example, but that's a completely different supply and demand equation than the CBD regions.
Okay, I'll let someone else ask the question. However, if there's no more, I'd like to ask one more. I'll let.
I might get to some other questions first, and then we'll come back to you. Is that all right,
Yeah,
Kevin?
thank you. That's
Thanks.
fine.
I'll just switch you off there. The next one I have is from Tracy. I'll go down to you, and so Tracy, you are live. So we've got here. Where are the workers coming from to service the new hotels? That's an interesting question. Are you there, Tracy?
Yes, I am. Can you hear me?
Yeah, I can hear you. Yeah, I know.
Thank you.
Yeah, this is a big hole, isn't it? It's a big
It is a big
industry.
hole. Yes, we don't have enough people in training, and with migration pathways being reduced, and a building boom of hotels, I just wonder where we're going to get those people to come and fill those jobs.
This
so
is
Brian,
a major concern.
Yeah.
Yes.
I'll let you answer that one.
Well, fortunately, Austrade has identified this in relation to their attempt to build more hotels. They did quickly realize a couple of years ago that they were going to need staff, and staff are hard to come by. So they've actually commissioned the Tourism Labor Force Survey in 2010, as well as again in 2015. And that is a fantastic, I'd recommend Googling it. It's a fantastic 116-page report put out by none other than Deloitte. And it goes into great detail about...
Yes.
Yeah.
I'm familiar with the report, yes.
Okay, yeah. And then if you're in, there's a few individual TIPs, Tourism Employment Plans, I think it was,
yes.
TEPs. Yep, so maybe you're familiar with those already. Within each region, they did a specific report in those capital cities, how they're going to find more workers. But that's the best solutions I can provide with you. I think everybody in the country is wondering how are we going to find more workers, and it goes all the way up to dealing with the 457 visa and other things.
Yes.
That's the question on everybody's lips right now.
That's right, thank you.
Okay, so thanks for that, Tracy. We have Marco. So let me see if Marco is here. Yes, I'll take you off. So Marco, you're live now. So you've got a question. Any idea where, oh, hang on, Australians are travelling internationally? Yeah, I guess it's, do you know where Australians are travelling outbound, Brian?
Yeah, we do have the data. I kind of left that off because it's a little bit less exciting, but Japan seems to be the destination of choice the last 2 years, possibly ski holidays. But yeah, Japan showing tremendous growth. I think something in the neighborhood of 15 to 20% year-on-year growth outbound to Japan.
Wow.
Of course, as well as that, Indonesia, Australians love their Bali getaways. It's cheap. It's a fairly short flight. But that's available in, I believe it's the National Visitor Survey because it tracks Australians' travel habits. You can download that from the Tourism Research Australia website. If you want the stats, or send me an email, I can send you a link to that as well. But those are the two. Indonesia and Japan are kind of the standouts.
That's really interesting. Japan's sort of making a comeback, if you like. And I imagine most of that is driven by senior leisure travellers. Do you think, or am I just making a sweeping assumption there? Anyway, okay, next question. We have a few. Hi, Bronze. Oh, Lynn. So, Lynn's nephew broke his collarbone, so she's late. Oh, I hope it's okay. Let me run through here, make sure I haven't missed anybody out. Here we go. Okay, yes, Kevin, you are right. Let's get Kevin back on. Okay. Kevin, you're back on, and that's the elephant in the room. I'll read it.
I'm not sure. Is that describing me?
Oh, well, no, I've seen you.
Thank you.
Hi. Okay, so this is a good one. When will TA or the industry seek serious research be done on regional Australia? Those arrivals are to disperse as they will. The impact to regional Australia will throw off capital projections. Well, yeah, I mean, yes and no, I guess. Do you have anything to say? Yep.
Yeah, there's two things to that as well. History has shown us in Australia that a lot of investment has been undertaken by individuals, couples, families, etc., on regional developments, whether they're actually branded hotels of 60, 80 rooms or more, or much smaller projects around the country. Even 25 years ago, there were over 250 small operations between 8 and 20 rooms who were projecting themselves at $150 average rates and above. That was 25 years ago. Most of those owners have moved on. And even the Australian banks, who flip-flop in and out of financing tourism generally on too frequent a pattern, weren't even aware that they were exposed to, in the case of Westpac and ANZ, over $750 million in what were mostly local loans, mortgage loans, on inventory that was an integral part of what could appeal to regional visitors, or to visitors to regional Australia, whether national or international. The same sort of pattern seems to be expanding now, aided by some of the the Airbnb and things of that nature, but also those committing themselves to serious tourism accommodation investments of varying sizes in rural and regional areas. But nobody knows how they're doing, except some of us who've run across a number of them in recent months are realizing that most of them are doing it pretty hard. And the major problem then comes down, particularly trying to influence the international visitors, is how they link into effective sales and distribution systems when they keep thinking of themselves as an individual property, where they'd rather keep the customer there as long as possible, and that's unrealistic. And TA and others in the past, and even now, I think, other than appealing to the domestic market, aren't doing enough to open up regional Australia in ways that can even improve the tourist arrivals that you were projecting earlier on. And I think that's why the research is necessary. Yes, Brian, it may not pay you anything in the short term, unless you find, if you were to make the commitment and the investment and do it, you actually might be surprised by the number of interested parties willing to back up and buy it. And I urge those who have the resources in that area to look at that seriously, and or get funding from either government, whether state or national, to take a serious look at it, because it is an area of investment that in its quantum is huge, but where a lot of money is being wasted by those same investors because they don't have enough guidance. Anyway.
Yeah, no, I'm pretty sure everybody here on this call today, there's no one that would disagree with you, Kevin. It's been an ongoing issue for the industry. Regional dispersal, getting people out there, getting people to stay. How do we get them beyond, I guess, rate guide and equivalence? And there is a little bit of research going on at the moment with regional visitation, dispersal, and second-time visitation, repeat visitation. But yeah, I mean, it's a question on, again, like workers, it's an ongoing issue that we have. So definitely. Now, Julian, I think you've got your hand up again, so I will. Do you want to ask another question or say something, Julian? I'll just got you on. Hello. Let me maybe not. You've muted yourself by the looks.
Bronwyn, I can add, just kind of carry on with what Kevin said, and I
Yes.
think, I mean, you and I both, as tourism researchers, we would love to, sink our teeth into regional Australia at any level. We both love these destinations to take our families to and
Oh,
visit
yes.
and
I
share
do
the
too.
joys of these. But yeah, it's just, we need to have some sort of most of the work that we do is commission work. So we get hired to, like when we're building Aqueous or or some other major development somewhere in the country, those developers will hire someone to do a feasibility or market demand study, and then they'll get a fairly comprehensive report. Some of those cost around $50,000 for a market demand study. So we do a fair bit of that when there's a major project going up in a regional area. But yeah, unfortunately, the funding just isn't quite there. There are discussions going on in the background. They've been going on for some time, but at the moment it's still Australian Bureau of Statistics, the Survey of Tourist Accommodation, which is the annual survey, and then STR Global does occupancy average rate anywhere in the world. So I would recommend participating with them if you are an accommodation provider. And if you're not an accommodation provider, you can actually purchase their data sets, historical occupancy and rate data sets. Wherever there's more than 3 or 4 properties, they can provide you a historical trading, aggregate historical trading report. But yes, it'd be great to dig into some of these regional areas. And there is a proposal or two out there for improved reporting. We'll see where those end up down the road.
Yes. Yes, hopefully they'll end up somewhere. Okay, do we have any more questions? This has been a really great session. I'm really excited by some of the figures that you've put out. One thing that I want to perhaps highlight is India, the opportunity that the Indian inbound market really provides. And I think they're all almost potentially low-hanging fruit for regional dispersal as well. Carolyn's not on the call today, but she's written a lot of blog posts since her trade mission to India. She went to India a couple of years ago with Mike Baird and the then Minister for Tourism. I can't remember who it was then. We've had so many, haven't we? So the impact and the potential for the Indian inbound market, particularly in light of the VFR market as well, is really, really open for regional dispersal. And again, they're a really loyal market, and we've seen evidence of this down south. I don't know if anyone here knows David Sheldon, his property down at, where is it, Tumbarumba, down that way. Down near the Snowies, at the bottom of the Snowies, he has a property, and he runs at around 80% occupancy of Indian VFR intergenerational travel. So they are traveling regionally. They're incredibly loyal, and they're a really great market to focus on. They're a lot easier to target than the Chinese market, we find. We speak the same language, and they're easy to cater to, relatively easier to cater to. So that's really awesome. Okay, so Kevin, hang on, overseas investors making regional investments in farming and agricultural prospects. Correct, yes, indeed, yes, leaving local investment behind yet again. You are right. What can I say? No more, no more to that. But look, it's been terrific. Again, a lot in there. I think a lot of positives, despite some of the stuff coming out towards the end there. A lot of positive opportunities for people targeting the leisure market, the business market. Obviously, Airbnb. It was really interesting looking at some of those charts there, Brian. I was hoping you could expand. What I saw is a direct correlation between Airbnb and the hotels in terms of occupancy rates and what's happening. So I was hoping you'd expand a little bit. We've got 5 more minutes on some of that Airbnb stuff.
All right. A lot of the Airbnb properties, kind of as I demonstrated there, I'll try to get them on the screen. They are outside of those capital regions, so it's a little bit less competition. I think I have far too many animations to make any progress here. we'll leave with the forecast occupancy rate. I mean, that alone, what's on the screen now, just kind of does paint the picture that the hotels necessarily aren't, you could say, hurting too much. They are going after a different kind of guest for the most part. And when we use the term Airbnb because it's a slick company name, but Stays, of course, is actually a larger Australian player, and then home rentals through your agents or beach shacks or whatever have been around forever in Australia. It's one of our favorite things to do when we go on holiday. So Airbnb is just kind of the new slick way to process those transactions, but they've been around forever. So it's kind of much more that regional. When you go away, maybe there's you just want a different kind of a stay. If you go with your family, you don't want to stay in a hotel room down the coast or something like that. You'd much rather have a kitchen and such. So yeah, so far we haven't really seen them competing head on with the hotels. This business travel listing is going to be a little bit of a different play for them, and we might see that to start to work its way through. But once again, in a long stay situation, if you're coming to Melbourne or Perth for relocation, 3-4 weeks, as a business traveler, you might actually want a serviced apartment or a home style stay. So when we look at this accommodation, I'm careful to use the word accommodation because serviced apartments and hotels are very different. And around 30% of all the accommodation stock in Australia is actually serviced apartment classified. So those are brand names like the Mantra, the Peppers properties that we well know, the Oaks properties. There's a lot of these brands. Meriton is real strong in Sydney. Gold Coast has heaps of serviced apartments. So they're definitely not a hotel room because they have the kitchenette or multiple bedroom situation. But there is that mix of the two. So just kind of be aware of that. I love my data, but I don't always classify it very well on the slides because it would just be all definitions then. So, but please feel free to ask me if you want to dig deeper into any of these data points.
No, this has been fantastic, and I think we're an hour now, so it's probably time to wind up. But some really fabulous insight there, Brian. Are we able to share these slides at all? I didn't ask you that in the beginning.
Yeah, I'll do a condensed version and send you that for distribution.
Fantastic. So everybody that came along today, I will send you a copy of the presentation because, again, there's some really good insight in there, some good statistics if you're looking to build any cases or, use those stats. There's some really awesome insight in there. And as I mentioned before, it's not all doom and gloom. There's opportunities. We just probably have to be a little bit creative as to how we do this. And, as Kevin said, we probably need to really sort of get behind that whole regional research, regional investment, regional tourism, getting some dispersal out there of some of those figures. As I mentioned, India is a really good opportunity and a good place to start with that. But as we always say, potentially, are you taking good care of our domestic visitors first before you enter into the international market? It's the low-hanging fruit, so I always like to reinforce that. So thank you, everybody, for coming along today, and thanks for your time. Thank you so much, Brian, for doing this. It's absolutely awesome, really, really valuable insight that everyone here will use. Getting lots and lots of thank yous from everybody here on the screen in the questions pane. So what I would say is thanks again, and you may contact me or Brian. Do you have an email you want to give out if anybody wants to contact you?
Yep, it's on the presentation, and I will, when you distribute the slides, it'll be attached to that as well.
Fantastic, great. All right, well, thanks everybody. I will stop recording and I'm going to end the session.